Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, and Traders Exclusive, back this week again in a market that doesn't seem to want to make up its mind, certainly. Today it looked on the opening like we were going to break out maybe to fresh all-time highs here. New home sales came out very strong, had some other economic numbers that kind of came out strong as well. So maybe that put a little damper in the rally as that trade-off between easy money and economic growth continues to play out. Certainly all eyes on Greece here. We saw really what I think the market will deem as a great non-resolution, which is exactly what the equity market probably is looking for, kicking that can down the road a little bit. So Greece will get some funding to survive until they figure out what ultimately will be the resolution in Greece. Until then, I think we're kind of stuck in limbo here going forward. We did see last quarter revenue growth in a recession. In other words, slower revenue growth for 2 quarters in a row here, although the market continues to head higher, so that price to sales figure, how much you're paying for sales, actually has increased, and we're trading at the highest level it's ever been. So just something to be aware of. I know in this kind of market environment with zero interest rates, valuations aren't nearly as important, but ultimately they do matter. And given the fact that we're having trouble to break through to new highs here, maybe some other market participants looking for that to matter as well. And with rates kind of creeping higher on that 10-year, we'll see what ultimately plays out there as well. So taking a look at my tactical sort of trades and opportunistic trades using those RB Trader option scanners, saw some big volume in the Nike calls, the front week July 2nd calls that expired July 2nd, the 107 calls, saw big volume yesterday. That temporarily distorted the term structure of volatility, so I was able to buy the July 10 expiration 107 calls, sell those, pay only about 12.5 cents. The spread theoretically worth about 27 cents, so getting something at about a 50% discount here, just looking for those vols to realign. And we'll continue to use the option scanning tools to look for opportunistic trades rather than kind of position bullishly or bearishly here. We'll see going forward, but certainly I think until we have a convincing either breakout or breakdown in the market, probably best to stay short term and nimble, I think, in this market environment. So also looking at China, I think that has sold off recently, looking at kind of a discount here between China and the US stock market. So given the fact that the VIX here is trading in the low 12 area, the recent lows, the lowest level of the year outside of 2 days in May, I'm buying some S&P July puts, the regular monthlies that are at the money, and then hedging by selling an out-of-the-money put spread on the FXI, the Chinese stock market, the 46-43 put spread, bringing in about 50 cents, buying 1 put on the SPY, selling 5 put spreads on the FXI, doing sort of a pairs trade here. Implied volatility very cheap on the puts that I'm buying. Implied volatility comparatively expensive on that put spread I'm selling. So not only am I looking for China to outperform the US, but I'm also looking for those volatilities to realign. So until next week, this is Tim Bigham, and as always, and especially in this market environment, keep those position sizes in place and those stops going. Take care.